From the floor of the CME Group, this is Danny Riley on this Tuesday, February 23rd. Right now we're on the lows of the day in the S&P. The way the day started out at about 5:30 in the morning, the S&Ps were down about 3 to 4 handles. Part of this was due to comments made by the Bank of England that the recovery was going to be slower than expected and filled with volatility. And then the German business confidence number came out way lower than expected, and that put even more pressure on the markets. You know, what's going on here this morning was we opened lower. On the 8:30 open, we opened down, and then we rallied back. We're making new lows as we're talking. The market opened down a little bit, and then we rallied up to the 1107 level. Then the consumer confidence number came out at 9 o'clock. I'm sorry, I'm hearing the noise in the background and I'm not thinking correctly. But anyways, once the consumer confidence number came in way lower than expected, the S&P just tanked. In 18 minutes, it dropped 14 handles, and it was all filled with nothing but sell stops and sell programs. Now, in the equity report that we wrote this morning, the guys said that they thought that the markets were up against some very good resistance at the 1110 level, and that they thought that we should be selling rallies. Well, lo and behold, at the highs of the day, we were talking to Jason here, and we thought the markets were looking heavy, and thus we've got this big down move. You know what? We said a couple of days ago that the markets were a little bit overdone short term. We had a 70 handle rally from the 41 even low, and you know what? Like a lack of confidence in a lot of these numbers that we're seeing a kind of a lack of confidence in the markets this morning. They're weak, and they look like they want to go lower. Now we've got the 1091, 1093 level is our next support. And we're on the 1093 level right now. Below that, we've got the 1085, 1086 level. But again, you know what? When the market went up, we took out a ton of buy stops. And when we took out all those buy stops, the sell stops were placed. And right now, we're kind of in a thing of the path of least resistance, and that's into these sell stops as we're going down right now. As you can see, the pit's pretty crowded here. The rest of the markets are somewhat quiet. Over in the 10-year note options, they've got about 35,000 traded, and over in the euro dollars, they've got about 185,000 traded. Listen, that's all we've got for here today. We think the markets are in a kind of a sell mode right now. We never really turn completely bullish into the rally, but that doesn't necessarily mean that they can't go back up. You know what? It's all about back and filling, and it's all about price action here, and we've got to see the market come down to a good level, see it back and fill for a couple days to convince us it's any good. Right now, we're in a sell mode. We'll see you tomorrow.